All right, hello and welcome to Camel Finance. I'm your boy Camel, and Bitcoin is doing Bitcoin things, right? This has got an awful lot of people quite emotional. This has got an awful lot of people kind of confused. But as confusing and as complicated as markets can be sometimes, I don't think this is a big problem to solve. I don't think this is very difficult to solve. And I think I have the read pretty well. So I'm going to share this with you today. I'm going to show you how I'm seeing this thing at the moment. I did notice on Twitter, you've got everything from people saying that was just a simple open interest flush out. That was just a big liquidation event, and that's likely it. And what comes next is possibly a swift V-shaped recovery, followed by the next impulsive leg up, perhaps even to 60k. We also have many people on Twitter saying, well, this is to be expected, right? This is perfectly normal behavior for Bitcoin. We've had that run up. It's time to reject or start to go sideways into that halving. And then after the halving, we can enter a true bull market. And we even have some people that are saying that they think this is it for Bitcoin, right? Capo was right, or we're not going to make a new all-time high. So like I said, I want to go over this. I want to show you how I see this chart playing out at the moment. I actually think the read is pretty simple. So the first thing I want to address is this completely to be expected behavior? Is this completely normal, right? And that is to be determined. Now, if we hop into here, you can see the black line is the current cycle. Objectively speaking, two things are true from this chart. One is this is the second best performing cycle, okay, so far. Second, of course, only behind the 2011 to 2015 cycle in red. And two, the second thing that's objectively true is it's pretty much on pace with the 2015 and the 2018 cycles in blue and green, isn't it? It's not massively dissimilar from this trend right here. So the big question is, are we about to start blasting off here, right? And have to be open to entertaining an early top and more extended bear market in terms of time? Or are we just going to do what we always do and do something like this, right? I also know there's a lot of people out there talking about we're going to do a repeat of 2019 in blue, or 2020, I think that was, excuse me, when we had this whole, you know what that event was, right? That swept around the world and we got this big black swan type event. We'll just call it that. So starting with this, are we going to get a repeat with this black swan event? I think this is the easiest one to rule out, and I'll show you why. And that's because whilst a lot of people are just looking left and going, yeah, well, that's what we did last time, parabola, and then this huge crash back down to the lows. Structurally, nothing similar is going on here at all. This is 2012 through to 2013. The thing I want to point at, right, is Bitcoin puts in a range at the bottom, a base, then it breaks that range, back tests it, ranges, breaks that range, back tests it again, ranges, and then goes on for a parabola. Now, if I skip forward to the next cycle, we can see the exact same thing, right? We get the bear market low, a range, we get a range break, retest, range, and then a range break, retest, range, and a breakout, retest, resumption into a parabola. Okay, exactly the same thing. Now, I'm going to skip this whole 2019 cycle really quickly, and hopefully you'll see why. If we go over to today's cycle, okay, what do you see? Because I see a bear market low, a range, breakout, retest, resumption, and a range, right? Then breakout. So far, arguably no retest, so perhaps we have to come back here and do something like this, and then a range, and then a go. Or if we were to break out of this, we could say, okay, objectively speaking, this time really is different, right? But notice how all of those have the range, the breakout, the retest, the range, the breakout, the retest, the range, right? But now if I go over to this cycle, back here, where of course we had that big C19 type plunge, that big panic, that big black swan in the market event, look at the structure and look how different this is, okay? We put in the bear market low, range, breakout, absolutely no retest. Not only was there no retest, okay, there was no further range, then there was no breakout, retest, and further range. Instead, what we did was we just broke out, went straight into a parabola, and thus we had to come back and retest it for that, okay, for this event, for that black swan. That was what was going on here. So inarguably, objectively speaking, this is absolutely nothing at all like the current hard right-hand edge of the chart. What is going on today is exactly structurally similar to all the other prior cycles that I showed you, and it's absolutely nothing like this whole black swan event in terms of the structure, and thus I think it's pretty safe to say, of course it's a market, anything can happen. I'm not saying it's impossible that we come back and test the lows, but we can say with confidence that structurally it's absolutely nothing like this. So for me, this is the least likely outcome, that we are just going to plunge from here all the way back down to the lows. So then, with all that said, the last couple of things we need to figure out, right, is one, are we just about to do this, right? Is that it? Did we flush the leverage? Are we about to just V-shape recovery out of here and make a new massive impulse to all-time highs? Or are we going to trade in a sideways range? Are we going to base? Are we going to start to build out a more sideways structure, ready for that halving event, ready for the bull market and the standard 4-year cycle shape? And of course, the objective answer right now is it is too early to tell. But that does not mean that it's not an easy read. So I want to show you that next. So the read is quite easy here for a number of reasons, okay? First of all, if you've been watching this channel for any length of time, you know that every 60 days, roughly, give or take 10%, which is of course 6 days, Bitcoin will find a cycle low, and that is what we're in the process of working out right now. So arguably, if we take this as the cycle low to here, this is inside of that window, okay? 56 days is, of course, inside of a 6-day tolerance, either side of 60 days. So that is a candidate for a low. Now, it hasn't confirmed yet, but if we were to see, like my yellow squiggle suggests, a swing and a reversal out of here, then I believe that would be an opportunity for me to add a position, move the stops up, allow the first positions to finance the risk on the additional position, and then we'll see what the market can give from there. I don't think it's going to be any different to when we usually buy cycle lows for either this asset class or some of the other asset classes that we buy cycle lows for, but it is too early to tell now, okay? We never just buy a low. We always want to see and give the market space to prove that that's a low by either putting in a swing low pattern or by putting in some kind of trend line break. So I'm going to get rid of that yellow squiggle. I'm going to draw a trend line in here, and we're going to look for a swing low pattern. So if we get a swing low pattern, something like this, and then another candle up here with a trend line break, then that's where we'll get long. If not, if we're just going to maybe chop around in here for a couple of days and then blast out of this, then we'll add on the breakout just like we did back here. And again, it will be a case of seeing what the market can give. So it's inside that timing window. We could certainly need a couple more days. We could certainly sweep this low into a perfect day 60 or even run slightly later, but we're inside that timing window to look for a swing low. So far, nothing in this price action is out of the ordinary or unexpected. It's also worth noting that whether that's the cycle low and we do something like this and break out and go, or whether we have to chop around, make another cycle low, and then do something like this, in either scenario, once that cycle low is in and we can say with confidence that that's it, right? That's the 60-day cycle low, that becomes the line in the sand. And this is why I said the read is quite easy, and this is why I said that we're gonna know, right? We're gonna know exactly what this market is doing within a couple of days, because once it's found this low, that becomes the line in the sand, and all the time price action is above that low, then it's reasonable to expect that this is what's going on, okay? If that indeed is the cycle low, then we have a new 60-day cycle ahead of us, and thus this becomes my base case. Hence why I'm going to be adding long positions and moving stops up. If, however, we were to find that cycle low, wherever it forms, we mark that as our line in the sand, and then price was to trade up and come down and undercut that low, then we would have a breakdown, a failed cycle at this moment in time, and that will tell me to abandon my blow off top left translated cycle theory and stick with nothing is different this time, and we can treat this thing just like any other normal 4-year cycle. So we're at a really critical time right now because we're going to get our answer, right? We're going to get our answer, and it's as simple as that. Wait for the cycle low to confirm and be printed, right? Confirmed by a trend line breakout of this downward sloping red resistance line. Once we've got that, whether we end up marking it here, like I said, or slightly later, and once it confirms by breaking that trend line, then we will know, right? That becomes our line in the sand. All the while we're above that, then we're going to continue to accept the primary hypothesis, which is that we are going to new all-time highs and we're going to have an early top. And again, this is a really, really beautiful way of trading and of analyzing the markets, because this is just letting the market tell us. I don't have to know what's going to happen. I don't have to try to predict. I don't have to make moonboy calls or super bearish posts or any of that. I just say, look, once we find the cycle low, either we're going to continue to follow this parabola, right? Either we're going to get super bullish super quickly, in which case it's going to be time to draw trend lines, right? Like we always do, to draw our 3 angles of attack. There's one. We'll set this second one here potentially. Also notice that. I didn't even notice this before. Notice this though, right? We connect these lows with these lows and this current wick, right? And there we are. Have we just set our second angle of attack? Have we just set the second of the 3 for a parabolic blow off top? Are we therefore about to set, after this, a even steeper one and use that as our exit signal? Quite possibly. Now, again, I don't know, but that's the beauty of this. I don't need to know. The market is going to tell me, the market is going to speak, and all I'm going to do is listen, right? So either this is what happens, or, like I said, we'll find this cycle low, we'll bounce up, and then we'll come down and undercut that low, break down, also breaking our second angle of attack, and then we'll know, okay, that Camel was wrong about this left translated early cycle top. Camel will have been able to say, let's abandon this theory, okay, let's shift to plan B, and plan B is, of course, a standard 4-year cycle shape. We'll be looking for something more like this to play out, and I'll actually be very happy with that. I'll be very happy with that, because if this is what happens, there's 2 things that are advantageous here, right? If we do something like this, base, and then break out, number one, we're going to get a higher top because the bull market will go on for longer. If this is the case, we're probably going to see very, very large numbers relative to if we do this, right? And number 2, I've seen a bunch of these before. I've traded a bunch of these before. So how easy is this going to be? This is going to be so easy for me to sell near the top at because we're going to know exactly what to expect all the way through. We're going to know we're going to get a base, right? A little pre-halving pump, a post-halving sell-off, and then work our way up, ready to blow off, and then form a parabola, okay, with a much higher number. So this is what I want to happen. But I honestly think, as I've been saying over and over again, this is way too easy. I really think this is way too easy. I think too many people are looking at that. And I think the way you harm the most amount of market participants is continued upside, followed by some extended, drawn out, secular bear market decline, rather than what we've always seen historically for Bitcoin, which is just a short bear market within the context of a macro uptrend. This would be the first true secular multi-year bear market decline for Bitcoin. Not something people want to hear, especially because there's all this ETF hype and all of that stuff. But again, objectively speaking, right, number one, we will have our answer because either this cycle low holds and we continue up, and we have to accept that as the primary hypothesis and the primary base case, or this cycle will fail or trade sideways, in which case we can say, okay, we can scratch this one off and look to play a standard 4-year cycle. We'll also be able to come back to this chart and we'll get a very good idea, won't we? Because again, we're either going to do this, right? Standard Bitcoin things, in which case it's going to be really obvious, isn't it? Really, really obvious what's going on. Or if this black line starts to do this, okay, then it's going to be time to be thinking, oh man, I wonder if that's what comes after it, okay? So as ever, one day at a time, but the market is about to speak, we're going to listen. I still lean towards this left translated early top. And the reason for that is there's too many of these metrics that are conducive to seeing the parabola come early, have fired off. Too many of these, right? This is the volatility, and you can see volatility has only just begun to increase. This is set to get a lot stronger. People think this move has been violent so far. We've seen nothing, okay? And if you take a look at the volatility down the bottom, look at all these massive spikes up here, right? Massive spikes up here that coincide with these big blow off top moments. And here's us, right? This is a breakout for ants so far. We could well be seeing something like this unfold. And if that's the case, then this is going to do this, isn't it? So we are really in this neighborhood where I think too many of these metrics have fired off early. Too many on-chain metrics are suggesting we're at this portion of the parabola already. And there's not really any data that says we're similar to this. There's not really any structure, as I showed you earlier, that says we're similar to this and should be expecting this. All signs kind of point to us being in this parabola early. So I still am leaning on this as my base case. I'm still leaning on this blow off top expectation coming early. But of course, as ever, I am open to putting my ego aside, putting my bias aside. I don't care if I'm right or wrong. I just want to be on the right side of the trade, right? So I don't care what happens. I just want to be on the right side. Like I said, if you're a champion of the standard shape, then you really need to see this thing start to go sideways or down pronto, because if this thing continues to go up, then we are in for a very difficult time in trying to select the top of this market to exit at. Continuing with this theme, when I talk about balance of probabilities being in favor of an early top, okay, the chart back in July of this year was refuting the impact of the Bitcoin halving. So the question is, why would the halving cause the NASDAQ to pump? And of course it didn't, right? Nor did it cause Bitcoin to. Correlation doesn't equal causation. All along, we've expected this to be front run. And that's because, as the OGs will have heard me say a million times, it's liquidity that drives this market. It is liquidity, not the halving. And if it was the halving, then perhaps we could say the halving also catalyzes the NASDAQ bull runs at the top. So pause your screen and take a very good look at this. Again, this also is another one of those indicators that is firing off early, suggesting that what comes next is this, right? Followed by a max pain scenario. Again, like, don't shoot the messenger, okay? Don't allow society to do what it always does, which is turn to persecution of anything it doesn't agree with. Right now, right here, this is what is in front of us. Of course, things can change, and they can change quickly, right? This could, of course, be what plays out. But so far, all of these metrics are firing off early. Tells me to keep an open mind about seeing what's going on. Just to go back and recap, because there's going to be a lot of emotion over the next few days. There's going to be a lot of bears come out and say Capo was right and 12K comes next, bro, and all of this blah, 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 right? But objectively speaking, you only need to know a couple of things, okay? Number one, where's the cycle low? Now, any day now, we're going to get confirmation. Whether it comes lower first or whether that's it, we're going to get confirmation by what? By breaking out of this downward sloping red resistance line. Once that's broken, we will move these cycle lows up, mark the daily and, in this case, the weekly cycle low, and we will look to use that as our new invalidation. All the while price trades above those lows, then we have to accept the primary hypothesis, which is that we are already in the early to mid stages of this parabolic blow off top, and that we are likely going to get a top come early. Of course, find this cycle low, like I said, and take it out, produce a failed cycle, start to range or build new structure lower down. Then we can scratch this one off and say, okay, we've got easy mode from here. We've got a standard 4-year cycle shape, and it's going to be just like it always has been. So as always, I'm going to continue to do what I always do, which is add positions on these cycle lows. That includes for these crypto related equities. We're going to be adding those as well once we've got confirmation of a new cycle. We're going to be moving the stops up, and we're going to be trying to push this trade for all it's worth, because if indeed we are going to have this big parabola, then I want as much exposure as possible without taking on additional risk, right? We let the first trades finance the risk on the second and third trades, and we go from there. So sitting pretty in a nice position. Even if we add a position here and then we get a failed cycle and that stops out, well, we're going to have locked in all the profit from here to here in the first trade, all the profit from here to here in the second trade, and then just take a tiny little stop on the third. So either way, we're guaranteed to do well out of this situation. And as always, I will be back here every day to show you how I'm handling this market. For now, it all comes down to a break of this trend line. I highly doubt it comes today. Probably the earliest we could see it is tomorrow. But once this breaks out, then you best believe I'm getting long. You best believe I'm moving stops up, and expect me to have a third position here by tomorrow's video. Like I said, I don't think it breaks out today, but it is coming, and it's coming in the not too distant future. And in traditional finance, there's still plenty more gas left in this goose, right? There's still plenty more room for this thing to run. This high-low logic index indicates the Nasdaq is nowhere near a major top yet. Every major high since 2000 happened only after this logic index reached 1.92 or higher. We're currently at 1.47, okay? No way near the top level. So it, again, suggests there is more room for the markets to run. And the Bank of America bull bear indicator has not been above 5 in 2 years. So again, speaks to plenty of room left, plenty of gas left in this goose to do something like this, where we find new all-time highs for the stock market. And then once we get into this neighborhood, it will be time to start reassessing positioning. Overall, things look pretty good. Remember, as I said in the weekend's video, this week is a big week. We got the CPI print, we got the rate hikes or rate pause. It should be a lack thereof, rate hikes and a rate pause. And then we should be able to start to see these dollar rollover, right? All the charts. I'm not going to go through them because I did that at the weekend and nothing has changed here because it's only 10 in the morning UK time. But I'm getting ready to, like I said, keep a good eye on these crypto related equities, add positions and move the stops up. And of course, as I said, I'll be back to show you how I do this all in real time. So that's it from me. Welcome to the week. I hope you're looking forward to this one as much as I am. This is going to be a banger of a week. I can tell you that right now. So in the meantime, I hope you're doing well in life. Take care from me. All the best. Cheers. Bye.